Disney's shares rose as much as 7% in extended trading after reporting better than expected fiscal first quarter earnings on Wednesday, and as the media conglomerate also cut costs while revenue stagnated. Earnings per share came out at $1.22 adjusted. That's against a 99 cents that was expected, and revenue was also higher than forecasts. Disney also announced it will take a $1.5 billion stake in Fortnite studio Epic Games and launch its flagship ESPN streaming service in late 2025. The date of this launch has been long anticipated by the sports media world. Let's get more on this now with Mike Ingram in London. He is Senior Market Strategist at Active Trade. Thank you very much for being with us today. So great results for Disney. What were the main drivers behind that?
Yeah, I mean, if you look at the top line, I think revenue was actually more or less in line with market expectations. I think the story this quarter has really been the parks have done, I think, quite a bit better than most analysts had been expected. I think that the profitability of the streaming service is starting to turn around a bit. I mean, the losses incurred in this quarter by the streaming service were down by $300 million. So, we are closer to breaking even on that business finally after actually years of losses. And but on the other side, as we probably had guessed, the film side not looking so good. And as I say, costs overall coming down quite rapidly. Budgets in recent years at Disney have completely blown out of proportion. They're finally starting to rein that back in, and that's allowed them to beat, as you say, the expected results this quarter, and also raise guidance for the full fiscal year by something like 7%.
Interesting, something to keep in mind. Mike, the company said to expect profitability of the streaming division by this autumn. Do you think that's feasible? Why is it so tough, not just for Disney, but for everyone else, to make money in the streaming division right now? And how does the competition look like?
Well, competition is tough. Netflix obviously does quite well out of it. I mean, Disney has narrowed it, as I said, its losses this quarter to something like $139 million. So, even though the subscription numbers look quite soft, by my reckoning, it's something like 5 million below what the market was expecting. Disney are expecting to start gaining subscribers again in the fiscal second quarter. Like the other streamers, they are raising prices. At the moment, those prices seem to be sticking, which obviously raises the overall revenue line, and that drops right through to the bottom line. So I think it's quite plausible they might break even. The question, I suppose, becomes is, with very tough competition out there, you've got Apple TV, you've got Netflix, you've got Amazon Prime Video. They're all raising prices. The question is, well, how much of the consumer's wallet can these streaming services take? Because at the moment, most subscribers in the US are subscribed to 3 of them. Now, the question is, well, if they go down to 2, who are they going to drop? And a lot of surveys suggest that it might be Disney Plus if it comes down to that decision.
True. Very tough choice. Very interesting. Mike Ingram, thank you very much. And now let's go to the top stories from around the world. China's consumer prices have fallen at the fastest rate in 15 years, putting more pressure on Beijing to support a stumbling economic rebound. The consumer price index dropped 0.8% year-on-year in January, marking the 4th straight month of declines. Producer prices also fell 2.5% last month, slightly better than what analysts had expected. Turkey's sovereign wealth fund made its bond market debut on Wednesday by offering a premium of 150 basis points over the sovereign. And it attracted extremely strong demand for its debut international bond deal. Turkey Wealth Fund notched up $7 billion in orders for its $500 million US dollar denominated bond deal on Wednesday. The Turkey Sovereign Wealth Fund's successful fundraising underscores how investors have embraced new central bank governor Fatih Karahan, who was appointed last Friday. And in Australia, the government is planning on introducing laws giving workers the right to ignore calls and messages from their bosses outside of work hours. The right to disconnect is part of a string of changes to industrial relations laws. Authorities say the law will protect workers' rights and restore work-life balance. The provision will stop employees working unpaid overtime.